Today, this video I have made specifically for this guy named Prophet on YouTube. So I've followed him now for the past few months, and I've been watching him, trying to figure out how to read charts, and he's been struggling. He has some wins, he has some losses, just like any other typical trader trying to figure stuff out. But I think he's been going through more losses than wins, because what I notice is he's close to figuring it out, but he's very far from figuring it out. So Prophet, this video is for you. You can watch this and I can show you shortcuts and easier indicators for you to use so you can hone your day trading skills. Honestly, from my point of view, I think you would be a better swing trader, but I don't think you understand the concept of swing trading versus day trading. So I'm going to show you some of the things that I have learned over the past few years on how to day trade. So right here on this video, I'm going to review to you the things that I feel that is a lot of noise for you. So as you can see here, the number one issue that I see right here is you're trading on the 1 minute. And unfortunately, the 1 minute is never going to give you a real picture of what the trend is really doing. And also you have a 1 day chart as well. I already know that you pull up these, you find these things on the hot list, which means those are the ones that show up for the day that are high in volume or moving up or gapping up really big. And this is how you find these. And the thing is, you do not need a 1 day chart to trade this. There's no reason for this. So you have all this noise here with, I don't know, all these R3s, R2s, and all these resistance and support levels on the 1 day when you don't really need it because you're day trading it versus trying to swing trade it. Now, if you were swing trading something, you might need some of these things, but honestly, I would rather use like Fibonacci retracement or finding bigger picture support and resistance if you were swing trading, but you're not. So you're using the 1 minute. That's the biggest mistake that you could do, and I'm going to show you why. And then also another thing that I see here is you use these Bollinger Bands. Now I know you understand the concept of Bollinger Bands, but from my perspective, it's a lot of noise for you. So you have your resistance here, and you have your support, and you have your middle line right here to where it's pretty much a moving average, and then you have all these clouds and things like that going on here within the Bollinger Bands. It's like it's confusing looking, and I think you can simplify that. And you have your RSI. Unfortunately for me, I'm not able to read RSI just because it's just a bunch of squiggly lines to me. I'll show you what I use, because these squiggly lines don't mean anything for me. Oh, it goes down, it goes up, and then and then you also use this OBV line. OBV looks very similar to RSI, so that's another noise for you too. It's like, why are you using RSI and OBV? There's other indicators out there that can help you figure stuff out a little bit easier. I'm going to show you my setup, and then that can help you. So as you can see here, like I said, 1 minute is not a good picture. So the reason why I said 1 minute is not good, picture like, one of those puzzles, like imagine like one of those, puzzles was like 100-piece puzzle. I would rather do a 100-piece puzzle versus 1,000-piece puzzles. You know what I mean? Because 100 pieces is much easier to install when you're putting the puzzles together. But if it's a 1,000-piece puzzle, that's a little bit more difficult. And the 1 minute is the 1,000-piece puzzle. So I'm going to show you how to simplify that and make it more into a 100-piece puzzle versus a 1,000-piece puzzle. I'm going to simplify that for you. So I showed you all the things that I feel like is a lot of noise for you, and a lot of things that probably would not help you along the way, because what you're doing, you're using the hot chart for the day. Whoever has gapped up really high. So if they gapped up really high, you're looking for the big pop up, or you're looking for the big slam down for the short. And then, of course, that with any trades, it can chop sideways on you, and unfortunately you just end up, being confused in between. But it happens all the time, but that's what you're hoping for, a big pop up or a big drop down. So let's go through this. Let's review here. So you tried to do this there, and unfortunately you couldn't find a trade on there, and then you ended up going to OBLN. And then what I noticed was you were trying to short OBLN, and then I'm gonna show you, you did it on, I think, January 20th or January 21st. But I pulled the exact day that you were trading it, and I'll show you exactly how to trade this versus what you were doing on the 1 minute. The 1 minute is so confusing, So let's go through this. Okay, you were doing OBLN on January 20th or whatever it was, and you had the 1 day chart and the 1 minute chart. Remember, 1 day does not pertain to you because it's on the hot list for the day. So the only thing you can do is day trade it, which is a smaller time frame, and 1 minute is not going to do it for you. What you really want is, so see, this is much simpler now. I have gotten rid of all the noise for you, and this is how I would trade right here. As you can see here, I'm using 3-minute time frames, and this will clear the picture for you versus 1 minute. 1 minute is so confusing, it's hard to see the big picture of what the trend is really doing. So I have these different indicators. I'm not going to tell you what these indicators are, but I'm very sure that if you were curious enough, you would go find it. But I'm simplifying it for you. So I have here, what I use as my candles is your Heikin Ashi. Heikin Ashi is the Japanese candlesticks, and mathematically it smooths out the candles for you rather than being confused with green reds all the time. So the mathematics behind the Heikin Ashi is much better from my point of view because it makes it look so much smoother when you're trading it. And also, I have these other two indicators right here, and I know they both look very similar, but sometimes they serve a different purpose depending on what the situation is. But as long as both of these are matching right here, that's when you should take the trade. So you try to short it on opening bell. So as you saw here, it did drop. It did drop right here, and then you eventually got out right around this area right here. So you ended up getting out right around this area. So you took a little win right there. But if you notice on my indicators right here, right here, this is when you should be taking a long right there. It's as easy as that. It crosses up above bullish territory. And of course, this other one that I'm using is above too. So this was above, so this was bullish because remember, you found it on the big gap up, so this was on the radar and the screener, whatever. And then of course I have the SMA line right here. You can use the EMA line or SMA line, but you have too many lines going for you and it's confusing. So I just use one magical line, and then whatever number you figure out, you'll figure out, oh, it's above this line and I can hop on. So you got out of your short right there, and then if you notice with the different indicators, it's only these different indicators right here let you know, hey, hop on right here, we're bullish, and then of course you ride this all the way up. And most likely the way you trade, most likely you would be out here with this red candle right there, And then you'd be like, okay, so should you be coming into a short or just wait things out? But if you were patient enough, you'd be like, okay, just let things settle and see if this continues or whatever like that. But as you can see here, you have another trade right there, popped up bullish again. And as you can see on this other indicator, we've been bullish. It's been above. As long as this stays above or whatever like that, but it's the trend. Like they say, the trend is your friend. So it's easy as that. And then of course you're above the SMA or EMA line right there. So you ride that up, And then of course right here, since you're a day trader, you'd be out in this red candle right there. And then you can feel free to take a short if you want, because you can take a short right around here. You can take a short right around here. It'll give you a little bit right there. but it's nothing but red candles right now, you know. And of course, you know, if it's a really strong trend of upwards, you can do this several times over with, of course, you know, usually after a few pops, it ends up chopping sideways on you. So it's kind of harder to trade. But yeah, I mean, you know, these indicators right here, it just shows you you're bullish or bearish right there. And that's all you can do, you know, that's all you need to do is just ride these you know, different indicators. And it's not a lot, you know, it's not what you're using, Bollinger Bands, all these clouds and lines and crisscrossing and all the other stuff. It's just too confusing. You should simplify that, you know. And if you want, once you figure out what these indicators are, you can back test this with all these other trades that you try to do, you know. Yeah, and the thing is, just remember, it needs to have, you know, and just remember, it needs to be on the hot list, you know, or it needs to be, or some kind of news catalyst or something like that, because most of the time, a lot of things just kind of chop sideways, you know, unless you just figure out the pattern. So, but yeah, I mean, even today, so today is February 25th, 2021. Let's see if you can, like, you know, day trade something more popular that is not on the hot list all the time. The one that would not be on the hot list that's popular is Plug. You know, let's see if you can trade that. You know, so we had a huge sell-off today, so you could have shorted that. You know, you could have shorted that today, but as you can see here, based on these indicators, you can hop in these right there. Look, that's why I have these two indicators, because they need to match, you know. So this, yeah, it's above right there, but it's not completely above until right there. So this is when you should take a long, somewhere around this range right here, you know. And sure enough, look at the candles. The Heikin Ashi smooths it out and says, hey, we got green candles right here, so you can ride this little pop up right here. And of course, the red candle, you be out right there, you know. Yeah, and then if you want, you can hop back in on these green candles. You got 3 green candles. Remember, these are 3-minute bars. It's not 1-minute bars the way you've been trading. 1 minute is stressful, and 1 minute just doesn't paint a good picture for you. So 3-minute bars, you know, 3, 6, 9. You got 9 minutes of green candles right here, so you can hop in for another scalping opportunity for a few more pop-ups, you know. And then, of course, right here, when it hits bearish, right there, that's your bearish signal right there. But just remember, sometimes when you're chopping sideways, it's not going to work for you all the time. You just need to make sure that it has enough volume, is really popular for the day, whatever. But yeah, you can, you know, the red candle is down right here, you know. So from 48.74 all the way to 48.20. So that's 50, 60 cents right there. But of course, on a really good day, it might drop a couple bucks on you, you know. But yeah, I mean, that's all I wanted to do, is just simplify, you know, your trading strategy, and hopefully this will help you a lot versus, you know, your Bollinger Bands. Oh my God, when I look at you, when I watch your videos trying to figure it out, it's like I was there at one point, you know. I had like 20 different indicators. I was using Ichimoku clouds. I tried Bollinger Bands. I tried RSI. I've tried, you know, RSI to me is just squiggly lines. You know, I'd rather use something like that's more like a cell phone signal. You know, give me cell phone signals that are going up like this. You know, that's what you want, man. But yeah, I hope that helped you out. You don't have to use all these indicators, but I'm pretty sure that some of these indicators might help you along the way, you know, to help simplify things. But 1 minute is not going to do it, man. You're going to stay confused all the time. You know, so you need a bigger picture. 3 minutes, you know, even if you wanted to, you can trade 5 minutes, but I prefer 3 minutes because it gives you a little bit earlier entry, so you can hop in a little bit sooner, you know. So but anyways, that's all I have for you.